Hello and welcome to another update video about Gala. We currently continue to see a little bit of upside. I wanted to take the opportunity to just take a look at the daily chart. Again, it doesn't really make any difference if I use the Binance chart here, which is Gala USD, or the Kucoin chart where we've got USDT. We've got a little bit of a longer chart history, have a little bit of an additional up and down here. It doesn't really make a difference. I do consider that in my Elliott wave analysis, but generally what you need to understand is that USDT charts, tether charts, are less reliable in terms of an Elliott wave analysis because you get frequent depacking of the US dollar. And even if it is only really, a little bit minor fluctuations, you still get some spikes, odd spikes that if you do count them in your Elliott wave analysis, they can create a wrong wave count or can misguide you, especially on lower time frames. That is why I try to use, whenever I can, use USD charts. It is a problem because a lot of people ask me sometimes, why do you not use the USDT chart? Sometimes the USDT charts have a longer chart history, and I do then consider that in my Elliott wave analysis. But in terms of especially the lower level wave counts, or when it really is about, do I use this or that chart, then I usually the fiat currency chart wins. Okay, I wanted to start on the daily chart, just outline again the risks but also the potentials of this chart. In truth, nobody knows if this chart will ever recover. We see a short-term recovery here, which is great, but we haven't even made a higher high on the daily time frame, so the daily trend is still down. So it's not time to get overexcited. However, anybody who believes in the project obviously needs to understand that we are at historically low prices, really. I mean, last time you had the chance to buy this was more than a year ago at this price, back in September 21, just before the metaverse spike and hype really started for a few days, really, and then it came down again. I did make a sandbox video a few days ago, a week ago, and it talked about how on Google Trends, actually, the market sentiment, obviously you can see that when you look for how people actually looking for the metaverse, and you also saw a spike back in November, and actually the search, the searches on Google, they basically relate to this here very well, very similar ways. Okay, what you first need to know is that cryptocurrencies in a first bear market, they usually retrace around 80 to 90%. Gala, however, has retraced a lot more. It has retraced, I believe, around, we need to start at 0. That's what you normally do when you do Elliott wave analysis and you have the first real spike. You start around about at 0. We can adjust that exact to 0. And it takes us to, well, we've retraced, really 90, 95, 98% or something, right? So this is a bit concerning. It is a very young market. I always have to add that, a very young market, and it could very well be, it could very well be that it is completely normal that in these bear markets, these coins retrace that much. And a lot of them do, we know that. The thing is, we don't have any long-term data. That's the problem. We can only look at long-term data of other assets. And if, for example, a stock retraces below the 88.7% Fib level in the first larger correction, and it stays there, then that's when the CEOs, leave the company, they resign, and there is restructuring going on. Now, I'm fully aware they have a lot of cash in Gala, which is good. They made lots of money with selling their nodes, which is good. So hopefully they survive the bear market. I guess that's their strategy, to try to survive this while the market sentiment is so down. And then hopefully, they have enough cash, obviously, or money to keep them afloat while sentiment is down. And then when the market's going up, they obviously make much more money. But the key is, I think, also for investors here and traders, that this project needs to stay alive. Otherwise, obviously, it will die over time, which is not what we all want. I also like the project, don't get me wrong, but I need to point out the risks here. The point is, for me still, even though it's a new market and everything, and cryptocurrencies are highly volatile, it still is a sign of weakness if a chart drops below that 88.7% Fib level, especially if other coins are not necessarily doing it. Many are doing it, yeah, but also there are many who are not doing it, or at least some, and these are the most solid charts. But nevertheless, we still want to give it a chance here, but I cannot get around highlighting the risks here. Everybody needs to know that. But also we want to highlight the opportunities, because if we do the targets for the next all-time high, yeah, you take the Fibonacci extension tool and we go to the most recent lows, at least approximately. Doesn't need to, don't need to be 100% exact here, because these targets are most likely only guidelines. But what you normally look for, if this was really a wave 1 to the upside, this a wave 2 to the downside, the wave 3 should take us to at least 141, most likely a little bit higher, because these are minimum targets in a wave 3. This a wave 1, this a wave 2, the wave 3 should take us into this region, most likely between the 1.618 extension and the 200% extension. And then we should come down in a wave 4, should move up in a 5, and that could take us all the way up to the 2.618 extension around 230. Now, again, that's roughly 100x. That probably won't happen in a few weeks. It will take a while to get this done. Mentioning here time frame is not very professional, but I would say it will take probably more than a year anyway, maybe next year, maybe in a couple of years, but be prepared for these prices in the next bull run. Only if the coin does recover, which nobody knows. So we need to take it level by level, need to start at the lower time frames. And here is what we can currently see on the lower time frames, which is a more substantial recovery. Nothing, however, and I always encourage people to do that, nothing that is worth mentioning really looking at the daily time frame, because here we had those movements to the upside all the time, and we did expect that at some point here as just a corrective wave 4 in a larger downtrend, because we had these before, yeah. And in, I think 2 videos ago, we talked about this descending wedge, talked about this being normally a bullish reversal pattern, and talked about that we get squeezed here into the apex and don't have much more space. We came into the orange support area, target area, between the 1.87 cent level and the 1.33 cent level, and are reversing now. Good green volume, yeah, lots of volume at the moment. Last time we had that volume was in November when we had these spikes here. And you get these in the bear market as well. So this is not necessarily a reversal signal, but with every reversal that we had, or temporary reversal, it's worth watching. It's worth watching because these can obviously be the spikes that can generate something bigger. Yeah. At the moment, my assumption is still that we are going down because the daily chart is still down. You can see we make lower lows, lower highs. So there's no reason to get overexcited. Lower high, lower high, lower high, lower high. We haven't even broken out of the wedge yet. So all of these things are not done yet. And it all depends on which time frame are you interested in, which time frame are you trading. On the daily, the trend is still down. So the primary expectation on the daily has to be still that we go down lower, especially as, based on the Elliott wave count, we ideally see one more low coming. Sometimes you don't get these last lows, yeah, and then you have to adjust the count because there's always different interpretations. That's why experience is so important in these markets, and also when you do Elliott wave analysis, because if you don't have the experience, if you haven't seen these charts before and different contexts and so on, it's easy to get to come to wrong conclusions. It's also important to be able to change your view if evidence suggests that the higher level assumption changes. But I would still like to see one more low before really exploring the idea of bear market is over, which doesn't mean it couldn't be over yet. I'm open to the idea it is, and in fact it would be very good for the coin, because ideally we want to avoid to drop below a cent. Okay, so that's important for the sentiment around the coin. I will consider the bear market could be over as soon as we break above the descending wedge, and I'm not telling you we couldn't do that. That's why we're exploring here the idea of an impulse emerging, that you know what's going on here. Because an impulse is the first sign that things could be changing here. Always bear in mind that larger corrections like this large ABC, yeah, if it becomes something like that, like a 3-wave move, yeah, for example, in a large ABC, which is a corrective pattern, a 3-wave move up, these can also have impulses. In a wave 1 you can have an impulse, in a wave C you usually have an impulse. So that is something that needs to be considered. And just because we break out of the wedge doesn't mean that we are making a new high on the daily. It means only that we've broken out of the wedge, which is a first good sign. But we need to break above the wave 4 high here as well. That will be at 4.9 cents. So it could very well be, and the risk is still there until we break above 4.9, that this is just a larger bounce, which would not be much surprise because we were so oversold on various time frames. But important is to take it level by level here. We see a potential impulse emerging here. I want to give you some guidance and let you know that below which level is there an increased risk of breaking down. So at the moment I think we have 3 waves here, Possibly we have 3 waves complete and might be working on that 4th wave here, which gives us a chance to put another 5th wave in, similar to what Solana is doing basically. It could also be the 3rd is not finished yet, but at the moment, and this is really micro counting, right? At the moment, just for simplicity, and it wouldn't make a great difference. For simplicity, let's assume this 3rd is already over and we're now heading in a 4th, which is sideways movement, which is typical. Then we would want the price not to drop below 2.24 cents again. If it drops below that level, I will highlight that on the chart here actually. If we drop below that level, there's an increased risk of breaking down. There will then be another support level which is relevant, which is the 1.92 cent level, the 78.6 retracement. Dropping below that will indicate that this whole attempt to the upside is failing, and indeed we only got 3 waves up. In a higher degree, wave 4, which is this one, what we talked about, which would eventually lead to another sell-off. However, if we get 5 waves up, it would be a good indication that something more bullish is going on, even if it's only part of a larger bounce, which will eventually make a lower low. But that would be a first indication that things are going the right way to the upside, right? And again, for that we need to hold this 2.24 cent level. Target for the 5th wave. Can make some assumptions here now. Not entirely clear because we have no evidence that wave 4 is over yet, but make some assumptions. So we could reach the 2.8 cent level, ideally here exactly at the descending wedge. And a break above that would be a first sign that something more bullish is going on. And that's my update about Gala. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.